All right, trade pros, we are live. Welcome, guys. Apologize for the lateness here. Just finishing up with our elite team, and here we are. So let's get at it. Let me just get that muted on that side there, and let's take a look at what we've got for today's session. So overall, so far on the day, it's been pretty range bound in the equity markets. Dow, SPOOs, NASDAQ, Russell, all kind of range bound today. And that is likely due to the fact that we have FOMC coming in at 2 p.m. Eastern. So majority of the traders, investors in the world will be looking out for that. And I do not really anticipate that much movement, any directional movement leading up into that event. I do expect some volatility, however, after the event, and we'll kind of chat on some of the quick points there. But if you guys are new, welcome. King Victor, welcome. Will, what's going on, brother? Happy to see you in here, showing love as always. So if you guys are new, welcome. If you guys are returning viewers, happy to see you guys back here. Thank you for taking the time out of your day to support the channel and sit in with us. Let's see what we've got on the docket. Couple of news events that we had today that kind of affected some of the markets that we watch. We had the crude oil inventory report. So that one came in at as a draw here, expecting minus 1.5 million, came in at minus 3.1. That's a nice print on that front as well. Gasoline, we saw a draw as well. It was a 0.5 million expected build. However, we got a draw of minus 1.7 million. Again, another bullish sign. So bullish on crude, bullish gasoline, and distillates. We are expecting 0.5 million, came in at minus 0.6. So a draw across the board, which is bullish overall for crude. However, we did see a bit of a run on the back of that. However, really after the inventory report, we kind of faded that news and came into a nice level around those 53.80s, pressing off. We're chatting about that with the team, looking to go long, fade this thing around the 53.80s up into those 54s, and then flip back to the short side right around those 54s. See, that kind of worked out there. So what we have news during the U.S. session, I'll quickly cover some of the overnight news just because Georgie is kind of a bit under the weather in beautiful Bulgaria. So the main overnight news I see here, we have ECB policymakers said to be divided on the next step with rate cut, guidance change, and further QE as all options. Then we also had a little overnight squawk came in from OPEC Secretariat, proposed new OPEC Plus meeting date of July 1st to 2nd, changing the date from June 25th to 26th requires OPEC consensus. Nothing really intense there. And again, focus turns to the FOMC rate decision, which is what the market is waiting for as well. We're waiting for that as well. So that's kind of going to be the big topic of today's session at 2 p.m. We're going to have the Fed come out with their, proposed press con. They're going to come out with their press conference. Don't think that they're going to cut rates today. Let's see what the forecast is. Forecast is them to hold. So we're at 2.5% on the federal funds rate. The forecast is for them to hold. I think they will hold here. I don't imagine they're going to cut the rates quite yet on this round, but I think the main thing traders will be watching for is that press conference at 2:30 p.m. Eastern when Powell gets up and starts discussing the Fed stance. And what we saw last time around was that the Fed was using the word patient. Patient was a big word that they were using they were using the word patience in order to kind of clarify whether they're going to implement the quantitative easing, whether they're going to step away from the tightening cycle and start cutting rates in order to support the U.S. economy. And so that patient word is going to be key in today's press conference. If that word gets removed, and like I've been saying in these earlier updates, the Fed, when they speak, these guys are trained by professionals. They are professional speakers. They are trained not to give you any clues, right? No direct clues. The way that they answer the questions is all very, very strategic and tactful. What we do have to do is read in between the lines, and that's kind of where you see these shifts in the market happen, is between what the Fed says and how the market takes that information and what they believe will happen as a result. So that patient word was key in the last conference. In this coming conference, we'll see whether that gets removed or not. If that gets removed, then that will kind of give us a hint that, you know, lower borrowing costs are coming, and that's kind of going to play into what traders are expecting. I believe the expectation for a rate cut in the July meeting is around 80%, which popped up from 30% just a month prior. So there was obviously a shift in perception from the market. Market is now believing we're going to have rate cuts in July. If the Fed comes out today and kind of confirms that, you're kind of already priced in. That's kind of what's been priced in. And I'll expect to see a bit of a bid on the back of that. However, the main thing that I'll be watching for is if Fed Powell does not remove the word patient. If they keep that word in there and they reiterate the fact that they're going to remain patient and they'll have to see more data come out, that's going to be a little bit of a turnoff, and that's not really what the market is expecting at this point. So I think the repricing on that kind of result is going to be a lot more volatile. That's obviously, well, fundamentally, theoretically, it should lead to a sell-off because traders at the moment are pricing in that rate cut. So if we get no indications of that rate cut coming, I think the market's going to dump, and I think that's going to be a little bit more aggressive than if we get what we're expecting. I'll still expect the market to bid up, but again, not that much. Football lovers, good afternoon. Should we? Yes, I would not recommend being in any trades prior to that announcement. Most of your institutional traders, or even if you're looking at really any news release, crude oil reports, FOMC, NFP, what you will notice if you're trading futures and you're taking a look at the depth of market leading into that event, a couple minutes before the event, you will often see the ladder is super thin. SPUs normally trade, you know, around, I think it's around 200 to 400 on average per price level of inventory. They come down to, you know, hundreds. I've seen double digits. So you're not going to have institutional traders looking to trade that release. The institutional traders are already going to be in looking to get out, or they'll be looking for the initial impulse, and then they're going to wait for retail to form that structure, and then they're going to get in on that structure. So that is my rant on the FOMC press conference. That's what I think is going to happen. Those are some of the scenarios I've highlighted, and that is really all the news that we are expecting for today's session. Don't really expect too much. If we do see anything outside of that, it's going to have to be a wire bomb. At the moment, it's kind of looking like the U.S.-Mexico tariff issue has been kind of resolved. And, you know, Trump yesterday came out with some tweets mentioning that he's going to have a meeting with President Xi, and the Chinese side confirmed that as well on their end. So that kind of gave a little bit of optimism to the market. So I don't expect to see any, tweets coming in, any squawks coming in about that trade war dispute. I think today it's really just going to be focused on the FOMC statement. So now that we've got that fun stuff out of the way, let's take a look at the charts. And let's see some of the levels that we've got on today's session, where we might head to, and where it could be some good potential levels. Whoa. There we go. All right. So here is the chart book. This is Sierra Charts for anybody wondering. If you guys are new, this is our futures, the futures platform that we use. It's cool. There's my pen. Awesome. All right, let's get started, guys. Up top, you've got the EPU contract. That is the September expiration contract. We've rolled that over this week. We are seeing 830,000 contracts traded on the session so far. Yesterday and Monday, actually today is Wednesday. Yeah, so yesterday and Monday, we saw around 1.2, I think yesterday's was 1.4 million contracts traded at this time. So this is kind of leading into what we were saying, that traders are waiting for that FOMC statement to come in, and the volume's kind of confirming that. So lighter volume than usual over the last 2 days. And again, this is as a result of that FOMC statement at 2 p.m. Traders just waiting for that. Daily change percentage, we are down a fraction, down 0.15% from the previous day close. Your previous day close was the 25.75. We are currently at the 20, currently at the 22s. So pretty flat on that session. Crude oil as well, it's a little bit deceptive because it's showing you that its daily change percentage is basically flat. Our previous day close was at 54.30. Last traded price was 54.12. Volume around 474,000, which is pretty good. 450 to around 550,000 is what we often see on crude. We did have crude oil inventories as well today, which we had some good movement off of. So although the daily change percentage is a little bit misleading, there's been great opportunity in crude. You can see we had a nice sell-off, nice rip, and then a nice sell-off back again. So good opportunities, although, daily change percentage is not really suggesting that there has been movement. So that's what we got on the quote board. Let's minimize that sucker. Let's jump onto our pivot charts here. So crude, obviously, we had nice press off of those lows around 51.60s. Opened up the session today. We were above the pivot, right above the pivot. We're kind of consolidating. Came down into that level, into the pivot, right around those 53.50s. Caught a bit of a bounce off of that. Caught a bit of a bounce off of that. Came right back into the range highs. Rotated back down towards that pivot. But we haven't quite got back down to that. Back down to that pivot yet. So at the moment, I am seeing the pivot holding as support, your 53.50s. So as long as the market maintains above that level, this bull structure is still in play. Look for a press back up to the upside around those 54.40s. That's what I'll be watching for here. Above the pivot generally is considered bullish. Below it, generally considered bearish. Your target above that would usually be the R1. However, I'm seeing we've got market structure highs in the way of that R1. So this will be your first target, those 40s. Above that, you can look for a press above 55 and into those 55.30s. Spooshies, kind of lining up similar to what we've seen on crude. Yesterday on the spoos was quite funny. I think we traded as high as R6 up here before we faded back down. So generally above R3, R4 is considered overbought. Yesterday we came up into the R6, and that's kind of where we've held so far. So we're forming a bit of a range as well on the spoos. And we mentioned to the room this morning that we're looking for a possible move into that pivot to start the session. I noted that at the 17 halves before the U.S. cash opened, I saw that there was 580 bids sitting down there. That was the biggest level of bids on the heat map, and that lined up right with the pivot. So come down into that level, finding some support right into there. If we get, the result that we're looking for FOMC, anticipating a move back up towards the upside around those 36s, and then potentially back up into R1 around the 45s. If we do not get, if the Fed says that they're going to remain patient, I would anticipate for this thing to maybe swing back up, and then we get the collapse back below the pivot and into S1. So that's what we'll be watching for on both of these guys. Crude oil at the moment is looking a bit like this. So you can see we've obviously came out of a bullish trend, right? Formed some support down here, came back up to those highs, couldn't quite break those highs. So now we're really sitting in between some levels. What we can do to kind of make this a little bit cleaner is just erase that one. And now you're seeing kind of the structure that's forming. So I can also go in and amend this guy a little bit to capture that range. There we go. So now you guys will see the range upside that's been holding your overnight highs in those 50s and your supports around these 53.70s. Granted, we did poke our head below it. We've come back up, held it as support, come back down, held it as support. Now we pressed back up. So this is going to be a key level for us right now for the bulls. If the bulls are going to make a press back towards the previous day close, previous day highs, we are going to have to get back above this level. This is a big level at the moment because you've got the point of control there, the 5-day point of control. You've got the open. You've got some VWAPs hanging around there. So, you know, this rotation up there, that 5-tick wick that's showing, you know, rejection of that level. If this next rotation does not continue lower, then we'll probably start seeing some rotations hold in here for a press up higher. So this is kind of my last line in the sand for the shorts. If the bulls can press it above there, we'll look for rotation up the previous day close, come back in, hold that level of support, pick it up for a run to the previous day high. That's what we'll be watching for on crude. More comfortable buying this market simply because the lead-in trend is bullish and we're looking to buy at consolidation lows. That's what we're looking for on that front. On the SPOOs as well, I had some of these levels. I deleted this one in the morning just to identify this range. And what we did in the room today was essentially qualify a long out of here into that level. We qualified a short right in here back down to that level. And then we qualified another long back up from this level there. And we are looking to short it here as well in the elite room before I signed off for this YouTube update. So we've been catching the swings pretty nicely in this market. Just being patient. At the moment, you are seeing this is a big support level here. Your overnight lows kind of hanging around the 21.75 as well. That has been the level that's been holding so far today. If we do hold this level into the FOMC, I would expect a press up. However, if the Fed comes out and they've removed or they've maintained the stance of patience, I think we'll get a flush below that level down into these 16s, 14s, look for a rotation back up, hold it as resistance, then we'll look to press it back down to that previous day low around these 10 quarters. So that's my game plan. I'm not going to be taking any trades going into the FOMC. I'll just wait, see what the impulse does, and then I'll look to jump in on some nice structure. So that's what I got for you guys on the session so far today. Last thing to cover here is the TRADEPRO Performance Index. So I will drag that back on up. All right, guys, there's our TRADEPRO Performance Index. Today's date, the 19th. 62% were green, 16 were flat, 22% were down. Overall, 78% of the room was green on the session. Super happy about that. We've had a great week so far, 80%, 68%, and 78% green in the room this week. So very happy to see that. We look to continue that streak going into the last 2 days of this week and into the last 2 weeks of June trading. And that's basically it. So if you guys have been on the sidelines, this is what our team's doing. We don't get to vote on this. None of the traders in the room get to vote on this. This is all our team, and this is what the results are looking like. So very encouraging results and looking to continue strong into the end of the week. With that being said, let me switch back to the camera and sign off with you guys. I'm not seeing any additional questions in the chat. I see Will's helping us out. Dan, check us out, TRADEPRO Academy. Check out the YouTube channel. If you like what you see in there, check out the webpage. What you can do on that webpage. Actually, if you're on there, let me get onto the screen, back onto the screen, and I'll show you what you can do. If you want to learn more, what you can do is go to TRADEPRO Academy. TRADEPRO Academy. And right at the top, this is what the dashboard looks like. But right at the top, you've got free training. Click on that free training. It's going to take you right in there. Throw in your name, your email. You'll get 6-lesson course, which is basically the first lesson of all of our paid courses. So technical analysis, stocks, options, forex, futures, and psychology. That's available to you in there. If you're new, make sure to check that out. That'll give you a feel for what our teaching style is like, and you can go from there. So now with that being said, that covers all of the questions. So happy you guys can join. Very appreciative of you guys taking the time to do so. And until next time, good luck and good trading. If you will be trading to the latter end of the session, remember the 3 rules: patience, diligence, and discipline. Take care, guys. Good luck and good trading. Signing out.